All right, here we go. Hey everybody, how you doing? Shane here from the Brookings Home Team, powered by Century 21. And it is the weekend, Friday, January 11th. And we're not doing a Monday morning mortgage tip or anything like that. But I thought I would come and talk with my good friend Chad here from VRS, getting ready for the tax season and talking a little bit about the government shutdown and things like that. But as usual, I'll have all of Chad's information on the top, on the bottom, or on the sides, wherever your device allows you to see that. You feel free to reach out to him and talk to him about any of the questions or the information that he has for you today. Feel free to reach out and he'll be happy to talk to you. So thanks, Chad.
Yes, absolutely. Thanks for having me.
For having me today here too. And I just thought it's a good time to talk about the tax season. And of course, we've talked about the government shutdown on the lender side of things, and thought maybe we better talk a little bit about that shutdown on the tax side of things. But before we do that, do you mind giving some information about VRS? You're a full service accounting group here, but I think there's probably a lot more that I don't know about that you can do. So if you want to talk a little bit about that, that'd be great.
Yeah, absolutely. Yep. Okay. So like Shane said, we're a full service accounting firm. Obviously that can encompass a lot of things. Obviously, first and foremost, you think about this time of year, tax returns. But we also do bookkeeping and payroll for business clients, reviews, compilations, and audits. We have business valuation services. So anything you can think of business-wise or accounting-wise between our staff here in Brookings and Watertown, we can definitely take care of you.
Perfect. And yeah, you do have two locations, one here in Brookings and the one in Watertown. Then.
Correct. So. Yep. So we've been around since the late 1950s. Opened up the new branch here in Brookings almost 2 years ago now.
Has it been 2 years already?
Yep.
Okay.
Yep.
Time flies.
It does.
Perfect. So, all right. Yeah, and like I said, I'll have his information here for you here at the end. But we want to talk a little bit about the shutdown and how that's affecting the tax season here. So I'm just going to let you go in and talk about whatever you want to do, and I won't try not to interrupt. So have at it.
All right. So obviously, first and foremost, some divisions of the IRS have been furloughed. They're essentially the crucial divisions are still open at this point. So the start of the filing season now is going to be January 28th. We finally know. So Monday, January 28th, you can begin filing your tax return. Now there are some forms that haven't been completely finalized yet due to the tax reform a year ago. So for most individual filers that have their W-2s, filing with their kids, you'll be able to file just fine by January 28th. But if you are a business owner, there may be some delay as far as waiting for a final approval on some of those forms to come through with the tax reform.
If you're a business owner, then?
Correct.
Okay.
Yep. That'll be the ones that primarily affect the most. Most things on the personal side will come through just fine by the 28th.
Okay.
So with that then too, we've been assured that refunds will be issued. They're not going to be delayed. With that though, the IRS is trying to match up more documentation with your return, so match up your W-2s, your investment statements, just to make sure to prevent fraud, make sure things are being done correctly. So as you may have seen in the last couple of years, it takes a little bit longer to get your refund, but again, that's not due to any government shutdown, that's just going to be due to them trying to help prevent more fraud and any theft protection. Okay. So basically kind of looking forward into 2018, some tax tips. First, the tax returns are due April 15th this year. I know in the past, if it falls on a weekend or Emancipation Day, it's kind of gotten kicked down. Like last year was April 18th, the last day to file tax returns. So this year we're actually ending on the due date. Which personally my wife is thrilled about. She gets me a couple days earlier than I typically am, so works out well. So for individual filers, C corporations, you are due April 15th. If you have a partnership or an S corporation, those will be due March 15th. Extensions can be filed for more time if you're not quite ready to file by those deadlines. Just keep in mind though, if you do have tax due, the tax is still due April 15th, you can only extend for more time.
Okay.
So if you don't pay any taxes in from April 15th and extend your return, then the IRS will assess interest and penalties on that tax once you file your return. Do file the return.
I have a quick question. Is farmers, does it depend, I suppose, with a farmer if they're an S corp or something, or is
Yep, and it's a good point too that farmers do the option to file by March 1st.
Okay.
By doing so, they avoid any penalties on tax due. It's become a lot harder for farmers to file by then because they're still waiting on forms from the investment company or outside investments they may have, K1s from ethanol plants that they've invested in. So unfortunately for a lot of our farmers, they'd love to file by then, but just waiting on information to come in, they haven't been able to do so. But yes, if you're a farmer and you have all the information, we can file by March 1st to avoid any penalties on tax due.
Okay. Okay.
So just as far as some prep things is that, I always recommend look at your 2017 tax return. It kind of gives you a roadmap as far as what you need for 2018, just to make sure you didn't miss the income off of a W-2 or investment statement or interest income. If you do work with a CPA firm, we do send out a tax organizer to all of our clients, which have a questionnaire, along with the information from the previous year, to kind of give you a good little guide to be able to get your information together for the year. For those that are clients, I mailed them out yesterday, so if you're waiting on yours, it's on the way. The ones that get electronically, those should have all been submitted to you yesterday as well in your online portal.
Okay. So it's in the mail.
Yes, yes. So we're ready for you whenever you guys have your information. So, so obviously as forms come in, make sure you kind of throw them all in one place. Just make sure you keep track of everything so nothing does get missed. And I would just recommend, be patient. Obviously, we're all eager to file the return, hopefully get some money back. But at the same time that with some of these forms, most of the forms are required to be submitted to you by the end of January. But if you have investments with an Edward Jones or something like that, they have a further deadline. So you might have to sit tight and wait on some of those investment statements, or if you do have K1s coming through from partnerships or S corporations, they may come longer as well. So make sure you sit tight. The last thing you want is for the return to get filed too soon, realize you missed something, all of a sudden you get a nice nasty letter from the IRS saying you owe more tax.
More money, yeah.
Or on the flip side, if you're looking to get, if you missed a deduction or something and have some money coming back, well, then you have to file an amended return, which typically takes 4 to 6 months to be processed and get your money back.
Okay.
So sitting tight for a little while here in January and February could save you a lot of heartache and headache down the road. And then if you do have, and keep in mind now for some of the tax changes that if you did not have health insurance, the penalty still does apply for 2018. That penalty is now going away for 2019. So if you did have health insurance through the federal marketplace, make sure you get that Form 1095A. That sometimes gets missed on the return, so make sure you do account for that as well.
Okay.
Some things you can look to do then with your tax return. So you're getting your return put together. You can still look at making a contribution to an IRA. So traditional IRA, Roth IRA, SEP IRA. You have until April 15th to make a contribution for the 2018 tax year yet. Okay. So some of those may be tax deductible based upon what you put it into and based upon your income. So maybe a good tool to be able to save some income tax for 2018. Same thing with a health savings account. So if your health insurance qualifies for an HSA, you have until April 15th to make a contribution for the 2018 tax year.
Okay.
So there's a couple of things you can do yet.
Help with that, yeah.
If you have a flex spending account, most are probably aware that you have 2.5 months into 2019 now to use up your contributions you made in 2018. And there is typically a $500 carryover then too.
Oh, okay.
So with some of those plans are kind of the use it or lose it. You need to make sure you kind of use up some of those here by March 15th.
Okay. Didn't know there was a carryover, so that's good to know.
Yep, and obviously all the plans are different,
Yeah.
But they can allow up to a $500 carryover. Okay. Obviously your plan may differ. Talk to your HR person to make sure nothing's getting missed there, so you're not losing money you put into it.
Right, right.
And then for business owners, hopefully a lot of information is running through your business checking account, credit card accounts. But keep in mind of anything you may have accounted for or paid for personally, such as business use of a cell phone, internet, home office, mileage, or if you're just at the store picking up supplies and you ran your debit card as opposed to your business card, make sure you account for those as well. Tell your accountant about it. Make sure you account for your own tax prep then too. And then looking forward to 2019, if you do end up getting a high refund, whether it's due to the doubling of the child tax credit now or the increasing of the standard deduction, you may want to look at reducing your withholding from your paycheck for 2019 to get a little more money back each paycheck throughout the year versus waiting for a big tax refund come tax time.
And that's what I had done when I had my kids, yeah. It just,
Yep.
why have Uncle Sam keep it when you can put it in your own account,
Yep.
so.
And on the flip side then too, that if you have kids that are now reaching the older age or getting out of college, Also, you're about to lose those deductions. You need to make sure you adjust your withholding to hold more, so you don't owe a bunch of tax come 2020.
Yeah, don't forget to switch it back.
Yep, absolutely. And like I said, everybody's different. Some want to use it as kind of a built-in savings plan, which great. But some, the same way, where I don't want the IRS holding on to my money throughout the entire year, but I have it in my pocket to work with. So obviously do what you're most comfortable with.
You bet.
And the flip side then too, if you have a lot of taxes due, things you can look at doing for 2019, just kind of systematically start putting some more money into a deductible retirement account, whether it's a 401k through work, traditional IRA, things like that to kind of help decrease your taxable income for 2019. Set up a health savings account if your health insurance plan qualifies. You can put up to $6,900 a year into the HSA. For a family, the 401k or the IRA's now increased to $6,000 per person per year, starting in 2019. That's actually our first increase we've seen in my 11-year professional career. So it's good to see that we can actually start putting more money into those plans now.
Yeah.
And you may have to make estimated payments. If you have a lot of tax due, just to help spread that burden out over the course of the year, you can make 4 estimated payments versus having to make one lump sum payment then come tax time.
Okay.
And I think one of the things we talked about with the tax reform probably about a year or so ago when we sat down here after the changes came through is that with the standard deduction increasing from $12,700 to $24,000 for a married couple, it becomes hard to be able to itemize. Now, so your deductions like medical expenses, mortgage interest, property taxes, charitable contributions, it becomes a lot harder to be able to exceed that $24,000. What some clients are able to do is bunch your expenses together.
Okay.
So basically now in 2019, they would prepay their next year's property taxes, make their contributions for 2020 in 2019 to basically try and be able to bunch enough expenses together in 1 year to be able to itemize, then hit the standard deduction then the next year and kind of flip back and forth year to year. It's just one of those tools you can use potentially if you are being close to be able to itemize but not quite there. Let's try doing something a little different to be able to get you over that hump then every other year. And as always, questions, concerns, comments, talk to a tax professional just to make sure that you're doing things correctly, that things aren't being missed.
Yeah, give you a call.
Yes, absolutely.
That's a lot of information, all stored up in that head up there. So I don't know, we went through kind of a high level view, for more or less high level, but there's so much more involved with that. And just like trying to sell a house on your own, doing taxes on your own doesn't always work for you. So give Chad a call here, and he'll be happy to talk to you more about what he can do and his team here to help you out and set you up properly, so you aren't paying Uncle Sam and them guys penalties and stuff like that. So
at least not giving them more than you should.
Yes, exactly. So I appreciate it. Thank you. And like I said, I'll have all of his information on the top, on the bottom, on the sides. Feel free to reach out to him if you have any questions. Feel free to share this video or tag anybody else you think would benefit from this as well. We appreciate that. You've got a Facebook page too. Speaking of that type of stuff, how can they get a hold of you? Got a phone number that you'd like them to call?
Yep, you can call us here in Brookings, 605-692-8425. You can email me, Chad, at vrscpa.com, or check out our website, brookingscpa.com.
Perfect. All right, and the 2 locations, one in Brookings, one in Watertown. So feel free to give them a call, guys. So thanks everybody for watching. That is this version of the tax season 2018 and the government shutdown. So thanks again.
Yes. Thank you, Shane.
Everybody, have a great 2019, and feel free to reach out to us if you have any questions. So thanks again. Talk to you guys later.